Well, good morning, everyone. Thomas Montgomery. It is March 1st. So welcome to a new month and excited to visit with each of you. We get together with our distribution partners most weekday mornings at this time, 8 o'clock Central Live, and we record this and post it up on our YouTube channel for reference later. In February, if we want to take a moment to recap last month, we launched the credit and funding program, a more consolidated approach, a bundled approach, a more affordable approach to help small businesses and others qualify for funding. It integrates the 3 C's, which is required to be approved: credit, collateral, and capacity. So I don't want to spend your time reiterating that. If you're not fully familiar with that, you certainly could go to guaranteedfunding.org and learn more. Today, we're doing the official rollout of a new funding program. This is a specialty funding program that not everyone will need and not everyone will be introduced to, but it's incredibly valuable, because if you really look at what you and I do as technical advisors, is we're finding ways within the limits of what's legal and appropriate and ethical to help people look better on paper, to be more credible so they can get approved for funding. That's really what you and I do. And it's very much needed, because there's a whole lot of people that want to need money, but many of them, the vast majority of them, don't qualify because of deficiencies or issues with one or more of the 3 C's. That's what you and I bring to the table. So today we're talking about credit card paydown loans. We have secured a relationship with a private lender. Now, the truth is, we've had a relationship with this private lender for several years, but the company has changed ownership. I had the opportunity to visit with the CEO, and we've come to terms. And so now this is available to our clients. So credit card paydown loans, hopefully those 4 words are pretty clear. What are we doing? We're loaning clients money for a specific purpose. And that specific purpose is to pay down and or pay off their credit cards. So who is our target market for that? Well, to no surprise, it's individuals who are enrolled in the credit and funding program who wish to pay down their credit card balances to immediately proceed to funding. So in other words, this is best used for individuals who are facing a barrier to getting approved for funding because their credit card utilization is too high. Now, high credit card utilization has an explicit and an implicit impact to funding. Explicitly, it will reduce the individual score. The higher our revolving utilization, especially once we get above 30%, the more that it'll bring down our credit score, because the way that the algorithms work, it shows or indicates that the individual may be in distress, may be living off of credit, maybe not managing their credit. So I know it's different, maybe the way that you and I think, well, if I've got credit cards, as long as I'm paying them on time, hey, I'm doing what I'm supposed to do. And while that's true, from a lender's perspective, they don't necessarily like to see people locked into using large amounts of revolving balances. Therefore, you and I, as technical advisors, can do a couple of things to move that money off of credit cards. Maybe we move that over to a term loan, and then that will probably reduce the client's cost over a period of time, lower payments, lower interest. Or if we're looking for a quick fix to essentially take the debt off the financials of the client, because with these private credit card paydown loans, we're paying off the credit cards, and the debt is nowhere to be seen at that time. So this is useful for those clients. So explicit and implicit impact of higher credit card revolving utilization. Explicit is that it increases the utilization, therefore it decreases the score. And the implicit, which I referenced maybe too loosely, is that it negatively impacts the credit profile, the fundability of the client. So having low or no credit card balances can often be the difference between an approval or a decline for funding. Now you and I have easy access to help clients pay off or at least pay down credit cards. Hopefully that makes sense. If you have any questions, comments, concerns, feel free to type it into the Q&A. So what is it that we're offering to do? Let's be crystal clear. We're literally going to wire the money to the client. We're going to wire the money to the client so they can pay down the credit card or credit cards. Then we can turn around and do a rapid rescore. So within 24 hours, those new low balances show, and we can go quickly to funding. So that's what the credit card pay down does. Wires the money to the client to pay down the credit card or credit cards. And then if desired, we can do a rapid rescore. Well, why is the rapid rescore important? Well, let's say you have a credit card that reports once a month, which most of them do. And we're recording this as of March 1st. Let's say that the reporting date was yesterday, in this case, February 28th. Well, even if you pay down your credit card today, the rest of the world wouldn't know it until March 28th, until the credit card reports again. Here, we're able to do a rapid rescore, typically within 24 hours. So now the world sees the paid off balances. Powerful, right? Powerful. Now, does this work for everyone? It does not. So we do need to be transparent and talk about who it won't work for. So that's what we're going to address next. So if the client has more than three inquiries in the past 6 months, we should run them through Credit Suite first to get those excess inquiries off, because this credit card pay down loan program is not available to individuals that have more than 3 inquiries in the past 6 months. But again, through Credit Suite, that can be addressed. If they have an open bankruptcy, not applicable, won't work. If they've opened 4 or more new credit cards in the past 12 months, to be honest with you, I don't know why that is. And what we're doing is obviously not opening new credit cards. I'm the messenger, not the source of this information, but that is another criteria. And then ultimately the lender, and this is a private lender. This is not a bank. This is not a credit union. This is not an alternative finance company. This is a private lender that's doing this. And when the private lender does this, the expectation is to be paid back. Can you imagine that? But they're paid back after we've gone to funding. So let's just use a hypothetical example. We've got a bunch of people on training today, but we'll just use Ryan, for example. So let's say that Ryan has $10,000 of credit card debt. Well, one of the things that we do is, before we would introduce the credit card pay down loan to Ryan, is say, well, what is Ryan's expected funding? So after we pay down the credit card balances, what do we expect his funding to be? So what this bullet means here is, if we don't expect that Ryan will get at least $20,000 of funding after the credit card pay down, then he's not a good candidate for the credit card pay down, because we need to loan him $10,000 to pay off his credit cards. And if we think the new funding is going to be less than $20,000, then it just doesn't make sense. Simple math, right? So with that, I mean, that's literally our topic today. I want to spend some time maybe bantering, talking, discussing what you think of this. If you're an active distribution partner, you're very likely to see clients frequently that have high credit card utilization. And so this is a great resource for those that want to participate. All right, good old Timothy has the first question. Timothy's asking, does he get paid a performance fee off of the credit card pay down loan? And the answer is yes. Yeah. So let's go back and we'll use Ryan as an example. Ryan has $10,000 of credit card debt. We use the credit card pay down loan to pay off his $10,000. Timothy referred Ryan. Timothy's an affiliate. Timothy's paid 3% of capital raise. So would Timothy make $300 from that tranche of funding? Yes, you would, because that's the way it works. All tranches of funding create a commissionable event for the referral partner. Now, if you're a white label partner, of course, you determine your own pricing, your own performance fee. If you're an affiliate, it's based on the 10%. Great question, Timothy. Who else has questions on the credit card pay down loans? All right, Casey's asking about, do they have to be a credit and funding program client? They do. So this is a resource we're making available for our credit and funding program clients. So if someone just came to you off the street and said, hey, I heard you can, you've got an innovative way to pay off my credit cards, man, I'd love to do that so I could go qualify for a home loan, or I go qualify for an auto loan, or whatever else they're wanting to get funding for, whatever their reason is, then they would need to be enrolled in the credit and funding program. Ryan asked if there's a setup fee. No, there's no setup fee for the credit card pay down loans. There's no advance cost. It's not. It's paid back. The credit, the amount of funding that is extended to the client is paid back to the private lender after the client has gone to funding. So this is a short-term play that fits within our overall goal. What is our goal? To help clients legally and ethically become more credible on paper. High credit card utilization is one thing that can impact a client's credibility and fundability. A credit card pay down loan is a way to resolve that. Now, let's not be naive, and I don't think any of you are. So let's go back to the example. So let's say Ryan enrolls in the credit and funding program. He has using the same example, he has $10,000 of credit card debt. So we get him a credit card pay down loan. We wire Ryan the money. He pays down his credit card or credit cards. If he wants, we can do the rapid rescore. Then we go to funding, but don't ignore the underlying point. Ryan will need to pay that back, right? It's not like a grant from God to pay off people's credit card balances. It's a loan. It's just a loan that doesn't show on the books. It doesn't show on credit reports. Therefore, Ryan needs to understand after he gets his funding, then he has to pay back that credit card loan. So it's not a 1-year term or a 5-year term or a 10-year term. It's a short-term loan, and there's really no interest rate on it. So because it's irrelevant, it should be 30 days or less. This is meant to be done right before we proceed to funding. All right, Ryan asked about presenting this. Well, so it depends. If you're an affiliate, you do not really need to pitch this at all, because what do affiliates do? Not to diminish the importance or role of an affiliate. Affiliates refer people to their free landing page, and that's it, and get paid, of course. That's all affiliates need to do. That's it. If you're a white label partner, then as we're doing a credit analysis together, because if you're a white label partner, you're going to have them complete the soft credit pull, and then you and I should be reviewing that client's credit profile and discussing what needs to be done. Do they need to be in the credit suite? Do they need to be in the credit boost? Do they need a pay down loan? So it'll happen very organically. But again, if you're just an affiliate, don't worry about it. This is just something so you know we have more and more resources to help clients become credible on paper. As an affiliate, there's nothing that you specifically need to do. As a white label partner, this will be integrated into our credit analysis. If you're a white label partner, we should be having weekly calls to review every client, reviewing the client status, action plan, making sure clients are satisfied and en route to getting funded. We have to be laser focused on client satisfaction and client funding. So if you're a white label partner, please schedule weekly calls. We'll go through every client, make sure we have a plan, make sure clients are happy. Have any of you that are on the live training, of course, heard of credit card pay down loans before? Curious if this is a resource that you've used before. Now, again, this is different. What's an alternative to this, and we talked about this on our success story last week, where you had the gentleman that had $25,500 of credit card debt. What we did is we got him an installment loan funded, I think it was 3 days, and then paid down the credit cards from that. That reduces the client's monthly payments, reduces the client's interest rate, and then the client is paying back a term loan over a couple years instead of the high credit cards. That's still an available resource. This is a different approach, and it's different for a couple reasons. Number one, it takes the debt off the credit reports altogether. Secondly, with the rapid rescore, we're able to complete this transaction very quickly and go to funding very quickly. So for those of you thinking, couldn't we just take the client and get a term loan? Possibly, but some clients won't qualify for a term loan because of their high credit card balances or because of other factors. This allows us to not be held up in that traditional underwriting because it's a private lender. All right, questions, comments, concerns about credit card pay down loans. Great way, another great way that you and I can help clients together get funding based upon improving their credibility on paper. If you have questions about being an affiliate or a white label partner, of course, you can email us. Not preferable, but you can always call us, and it's answered live 40 hours a week, office hours. But email is the best way to reach out to us. But again, if you're a white label partner, we should be having scheduled weekly calls to review all clients each week. If you are an affiliate, keep it simple. Don't overcomplicate it. This is good information for you to have, but as an affiliate, just drive people to your landing page. Drive people to your landing page. There's a really nice 5-minute video that describes what we do. The content talks about the 3 C's. If you're an affiliate, you shouldn't have to do much, right? Just drive people to your landing page, and we provide the landing page for free, of course. Any other questions, comments, concerns on credit card pay down loans? All right, Frankie's asking, can we go back to currently enrolled clients? Sure. So again, if you're an affiliate and you feel like you have some clients that we need to take a closer look at this, feel free to email us, and then we can look at the client's credit profile and see if we can assist them with this. If you're a white label partner, just make note, and when we have our weekly call together this week, we'll make sure to go back, take another look at the client's credit profile, and see if this might be an available resource. Again, if you're a white label partner, and if you're not scheduling weekly calls, I don't feel that you're doing what you probably should or could to properly service your clients. All right, any other questions, comments, concerns before we hang it up today? All right, we'll see you back tomorrow morning. Have a great day.